Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe. Tap the bell, select all the notifications, and in doing so you will be able to be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one. We'll be taking a look at Elliott Wave theory here on the hourly chart with Binance as our data source, and we'll also be taking a look at the smart money concepts on the hourly as well. Let's start things off with the Elliott Wave theory side of things. Okay, so we were looking for a move to the downside yesterday. We scoped out this low range between 24,791 and 25,418. We started to see the move to the downside. We are expecting a 5-wave structure within here. It could be an ending diagonal, contracting, expanding diagonals, or it could be an impulsive 5-wave within this final 5th wave movement. So there's a few different structures that we're looking for here within this move. Now at the moment it's not clear exactly as to which structure is playing out. There's a couple of different possibilities in here, and for the most part this could just be a wave 1, this could just be a wave A. Some kind of retracement to the upside is expected at this point. Probably looking at that 200 EMA, maybe even up here on this previous high. So I'm going to give ourselves a bit of a broad range. I'm going to kind of say probably between these ranges, but if we use the fibs we can be a little bit more specific. If I measure that distance, and what I'll do is I'll grab another little yellow box here. We're going to be looking for 50 to 88.2. So yeah, it puts us right in here. You can kind of see this range. So we're talking 27,254 to 27,566 to the upside. Okay, that's based on this being the existing low. It's also possible that we just break on down and this B wave has just gotten rejected off this 50 EMA. Also possible, but we do have momentum to the upside, as there was a lack of momentum to try to pull us to the upside. There was actually significant amount of pushing to the upside at the moment. So our momentum is still very much telling us that we have more growth to the price. So we should be looking at price appreciation to the upside here. So for the most part, yeah, I'm still expecting a small move to the upside to kind of correct out this, and then again we'll look to kind of move back down again later. So all in all, if I remove the Fibonacci retracement tool, I'll kind of give you my thoughts and opinions. Okay, so we can see that we are expecting this move to the downside here. This could be a wave 1, up here for a wave 2, down for a wave 3, up for a wave 4, and then down into wave 5. Gets us right into the zone of our expected 5th wave movement. Alternatively, we end up with a 3-wave structure here, like this, a 3-wave structure taking us up higher, another 3-wave structure taking us down, another 3-wave structure taking us up higher, and then another 3-wave structure taking us down into our range, and would end up here with an ending diagonal structure. Alternatively, we end up with another 5-wave structure that is based as a expanding diagonal, if I can get my words out there, would have something like this, getting us down into there with an overlap on wave 1 and wave 4, with the 5th wave being the largest, wave 1 being the smallest. And then of course there would be the potential for this to be a big wave 1, up here for a wave 2, then a smaller wave 3, up for here, and then a small wave 1, a wave 5 being the shortest wave, wave 1 being the largest wave, as a contracting diagonal, but unlikely at this point in time, because I do think wave 1 isn't really showing a structure for that. But ultimately, heading down is where we're kind of thinking, where price has to kind of head off and finish that structure. Only way to prevent this from happening is to go up higher than $28,300. So we have to go up higher than this range here if we want to break out of that structure. If we want the market structure to change, then we have to be above $28,300. So yeah, I'm expecting a bit of a move to the upside before we move on down. And yeah, it's looking pretty interesting at this point in time on this particular movement. Now, if I was to trade this one, I would be using BitGet, linked in the description below, because that's where I do all of my trading activity, and they do some fantastic offers. If you haven't yet signed up to BitGet, check it out, linked in the description below. You can get up to $8,000 in deposit bonuses and all that kind of wonderful stuff. So if I'm going to short, I'm going to be using BitGet to short the market. I'm going to be looking at the structure that we have here at the moment. Let's say we're going to go short the market on that 200 EMA. I'm going to put my stop loss just above the swing high over here, and I'm going to go ahead and put my take profit all the way down here on the top of our expected range, 25,000. Do we get the number? 25,418. That would give us a risk reward ratio of 6.29, and I would be pretty happy with that. Okay, so that would be how I would approach this one. Fortunately, I did actually start shorting from yesterday. We were shorting from somewhere up in this range already, and all that kind of wonderful stuff. So yeah, everything here is looking pretty good at the moment for our market structure, for us to have to see a move to the downside overall. Okay, moving over into our smart money concepts, what do we see? Well, we can see that we have changed a minor change of character to bearish right in there, and nothing terribly too unusual about that. Fair value gap that I'm expecting us to move down and grab. We have the week low at the moment, so again we've got that week low idea, and we have the strong high, being up here. So we can see we have the strong high just up there, the week low down here. Equilibrium is up here again. Unlikely that we're going to go and hit that, as it would break our market structure to do so. Still, it is possible, of course, as this is only the very beginning. This could just be a B wave movement here, for example, and we can still hit that equilibrium, but I'm not expecting it to do so at this point in time. We'll see how that kind of plays out. Ultimately, we've got lots of selling pressure in lots of different areas here on the chart, and some buying is a little bit deeper into the price action there. Ultimately, we are still in a bearish structure overall. If I zoom out of this, we can see that we have our break of structure here, a break of structure here, a break of structure here, and over here is our change of character. So ultimately, everything here is still bearish. We haven't got any kind of bullish break of structure or change of characters at that level just yet. So ultimately, everything on smart money concepts is aligning to the idea that we have negative price action or price decreasing over a longer period of time, but there's going to be small little rallies here and there because nothing moves in straight lines, as we can kind of see in here. Now, the other thing that's kind of worth noting at this point is we do have ourselves with what I would call a bit of a bearish setup. This is because if I grab hold of my parallel channels, we have the higher highs and the higher lows down here at the bottom, and this is has a tendency to want to break on down. Now we can argue that maybe we've already done this because we did break down here and we've already started to descent. It'll be interesting to see how that kind of looks, but we were testing the highs, and well, yeah, we've got to kind of see this move on down from here. So high highs, high lows have a tendency to break on down. We talk about this pretty much consistently and all the time. Let me just show you a few more just in here. I'm just going to roughly draw these on. I won't be super accurate about it, but you can kind of see them in here. So when we see those, and there's actually a really good neat one right up here, right in there, you go. And obviously when they're the other way around, so let me see if I can, yeah, here's one over here. When they are going into lower highs and lower lows, we break upwards. We can see that. So for the most part, where we are right now on smart money concepts, it's and obviously Elliott wave theory, it's kind of saying that we have a high probability of break to the downside, and we're going to continue our structures kind of, you know, trend to the movement to the downside. Below the 200 EMA at the moment, below the 50 EMA at the moment, we are below equilibrium at the moment, and we are within nested 5-wave structures looking to complete that final 5th wave movement to the downside, but do expect us to move on up. As you can kind of see, it is occurring right now. We're kind of looking to move up into those ranges. So ultimately, I'm going to leave the video right there, I think, and if you have found it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.